Welcome back to the channel. Today, we're diving into one of the tech world's most exciting companies, Nvidia. As they prepare to announce their Q3 FY2025 earnings, the question on everyone's mind is, will Nvidia surprise us? Well, I don't think so. But before you click away, here's why that's actually good news. Nvidia's been on a relentless winning streak, with demand for its GPUs consistently outpacing supply. Their success has been fueled by the explosive growth of AI and accelerated computing. Nvidia's innovations are driving everything from generative AI to model training and inferencing workloads. But while all signs point to another profitable quarter, there are a few important details that investors need to consider. So, buckle up, because we're about to break down exactly why Nvidia might beat Q3 expectations, but without the jaw-dropping surprises we've come to expect. Now, let's set the stage here. Nvidia's Q2 performance was nothing short of spectacular, posting a record $30 billion in revenue, a 15% jump from the previous quarter and a mind-boggling 122% increase from last year. This growth was driven mainly by its data center segment, where Nvidia's GPUs are the backbone of next-generation AI applications. Their Hopper and Blackwell GPU solutions have been especially pivotal, as these products have become essential tools for companies looking to build out their AI infrastructure. Given these Q2 results, it's tempting to expect another blockbuster quarter. And Nvidia's Q3 guidance backs this up. They're projecting $32.5 billion in revenue. The market has already priced in a little extra optimism, forecasting around $33.1 billion. But, with Nvidia's stock trading at a high multiple, around 49 times its forward earnings, it's likely that even a slight earnings beat could fail to create the same excitement we've seen before. With all of this priced in, any miss on margins or revenue growth could lead to some short-term pressure on the stock price. Now, let's talk about the real secret behind Nvidia's strength: its strategic focus on AI and accelerated computing. Nvidia has built a remarkable ecosystem around its CUDA software, which is now available on all major cloud platforms. This means Nvidia is positioning itself as the go-to choice for developers and businesses who want to push the boundaries of what's possible with AI. This quarter, Nvidia launched the H200 platform, boasting 40% more memory bandwidth than its predecessor. This development further solidifies its leadership in the AI infrastructure market, giving it a competitive edge that's hard to beat. Nvidia is capitalizing on the growing trend of AI adoption across industries: healthcare, automotive, finance, you name it, Nvidia is likely in it. They've become a critical player in providing the hardware needed to power AI, and they're showing no signs of slowing down. So, where does that leave us for Q3? Let's look at some indirect indicators of Nvidia's demand. Tech giants like Google, Microsoft, and Amazon have all been pouring money into AI and cloud infrastructure. Google Cloud's revenue jumped 35% year over year, while Microsoft Azure continues to expand as additional capacity becomes available. What does this mean for Nvidia? Well, these companies heavily depend on Nvidia's GPUs, so the continued growth in cloud and AI infrastructure is a clear green light for Nvidia's business. And there's more good news: CapEx spending on cloud infrastructure is set to surge. Companies are ramping up their budgets to build out their AI solutions, and Nvidia is sitting at the center of this demand. The AI boom has brought Nvidia unprecedented success, but it's also set a high bar for earnings beats. The market expects them to outperform, and it's why the company is trading at such a premium. Yet, even if Nvidia manages to beat consensus, the size of these beats has been shrinking quarter over quarter. This means that, while we can expect Nvidia to meet or slightly exceed expectations, it's unlikely to see the kind of explosive surprise we saw in earlier quarters. To understand what's driving Nvidia's growth, let's quickly review their Q2 results. Nvidia's data center segment was the big winner, contributing $26.3 billion, which represents a 154% year-over-year increase. This segment's growth is fueled by the adoption of AI for workloads that range from model training to inferencing, tasks that require massive computing power that Nvidia's GPUs are uniquely equipped to handle. The gaming segment also saw strong growth, with revenues hitting $2.88 billion, a 16% increase from the previous year. As gaming laptops and PCs increasingly get used for AI and other high-performance tasks, Nvidia's gaming products have also found new demand. And let's not forget about Nvidia's automotive segment, which has quietly grown by 37% year-over-year, driven by the rise of autonomous vehicle technologies. With these impressive gains, Nvidia is clearly capitalizing on its role in industries that are reshaping the future. But all of this success has also led to a bit of a catch. When expectations are this high, it becomes more difficult to keep surprising the market. Let's address a concern that has been lingering in the background: Nvidia's exposure to China. Following recent trade tensions, Nvidia has limited its China revenue share from 20.3% last year to 12.2% in Q2 FY2025. This is a smart move, helping Nvidia reduce potential risks from geopolitical issues while still maintaining a strong foothold in global markets. So, while trade restrictions could impact Nvidia's growth in China, it's clear that they're already minimizing this risk. Looking beyond Q3, Nvidia is already preparing for the next wave of growth. The upcoming Blackwell products are expected to generate billions of dollars in revenue, with production set to start in Q4. This could be a game changer, pushing Nvidia's revenues even higher as they bring new technology to market. Nvidia's gross margins are expected to remain steady in the mid-70% range, a positive indicator for profitability as the company continues to innovate. But here's the kicker: Wall Street analysts expect Nvidia to keep growing earnings faster than revenue, thanks to operating leverage. This is a tall order given Nvidia's high valuation, and it means that while there's long-term potential, Nvidia's stock price may face some volatility if they miss any targets. So, where does that leave us? Nvidia remains a titan in AI and high-performance computing, a company that's truly shaping the future. But as the Q3 earnings announcement approaches, the market seems braced for solid, but not shocking, results. With demand still outpacing supply and AI adoption accelerating across every industry, Nvidia is well-positioned for continued growth. However, with most of the positive news already priced into the stock, the size of the earnings beat might be smaller than in previous quarters. This could lead to a mixed reaction from investors who expect Nvidia to continue exceeding its already lofty expectations. At the end of the day, Nvidia is a long-term winner, but with short-term risks. For now, Nvidia stock is likely a hold until we see how the Q3 numbers play out. Keep an eye on those gross margins and any changes in Nvidia's guidance as they prepare for the next phase of growth. And remember, while the market might be focused on immediate results, Nvidia's true potential lies in its ability to keep driving innovation in AI and computing for years to come. Thanks for watching. Let us know your thoughts in the comments below. Do you think Nvidia will beat expectations yet again? Don't forget to hit that like button, subscribe for more in-depth analysis, and ring the bell so you never miss an update. See you in the next one.